Good afternoon and welcome to your weekly FX options report. Today is Wednesday, April 28, 2010. In midweek trade, the major U.S. stock averages are trading mixed following the slide seen in the previous session. On Tuesday, the major U.S. stock averages took a tumble after S&P downgraded the credit ratings of both Greece and Portugal. Now, Standard & Poor's cut Greece by 3 notches to junk status, while Portugal was lowered by 2 notches to A-. And earlier on Wednesday, Spain's long-term sovereign credit rating was also cut to AA from AA+ by S&P. And the ratings agency also said that Spain's outlook is negative. It is light on the U.S. economic data front today, with focus on the Fed rate decision along with the latest earnings reports. The FOMC will announce their interest rate decision following their two-day meeting. Now, focus will be on the accompanying statement, with close attention on the language used by the Fed regarding the outlook for the economy as well as the Fed funds target rate. And taking a closer look at the spot FX market, the U.S. dollar does remain higher against the majors of the euro, pound, and the Japanese yen. The U.S. dollar is seeing demand not only on safe haven demand, but also as a function of securing funds. Now, euro dollar did extend weakness today to fresh early lows, with the pressure dragging the pair to the lowest since April of 2009. One way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, we'll take a closer look at the major IC FX option pairs in your daily trend report. Starting out with the AUX, such as the U.S. dollar against the Australian currency, the downside does prevail. The RSI is mixed with a bearish bias for the AUX, and the preference of trading central analysts is short positions below the pivot of 113, with targets at 106 and 102 in extension. For the BPX, the U.S. currency against the British pound, a rebound is expected, and the RSI is also turning to the upside. Now, the pair has rebounded on its support and should post a further up move. The preference of trading central analysts for that pair is long positions above 64, with targets at 67.50 and 70 in extension. Moving on to the CDD, which is the U.S. dollar against the Canadian dollar, the downside does prevail. The RSI is mixed with a bearish bias, and the preference of trading central analysts is short positions below 103.50, with targets standing at 99.50 and 97.15 in extension. For the EUI, which is the U.S. currency against the euro, the upside does prevail. The pair does remain on the upside and is breaking above its previous high. Now, the preference of trading central analysts for that EUI pair is long positions above the pivot of 72.50, with targets standing at 76 and 77.50 in extension. For the SFC, which is the U.S. dollar against the Swiss franc, the upside does also prevail. The RSI is supported by a rising trend line, and that pair has rebounded on its support and is approaching its resistance. The preference of trading central analysts for the SFC is long positions above the pivot of 105, with targets at 108.75 and 110.25 in extension. Last but not least, looking at the YUK, which is the U.S. dollar against the Japanese yen, the upside does prevail. The pair does stand within a bullish channel and is currently approaching its resistance. The preference of trading central analysts for the YUK is long positions above 90, with targets at 96 and 97.90 in extension. Now, moving on to your weekly commentary for the major FX option pairs. Last week, the U.S. dollar continued to reinforce itself against the majors and exotic currencies. And in terms of portfolio performance since its inception, which was August of 2007, it is up by 1,362.24%. And since the beginning of this year, it is up by 82.15%. We do have a trade alert for you here, which is for the AUM. Now, this week, as recommended in Trading Central's last follow-up on Monday, they are considering calls on the AUM. And the reason they are doing that is because the AUM is challenging resistance, and the daily RSI is supported by a rising trend line. Now, Trading Central analysts will also be keeping a close eye on the EUI, YUK, as well as the SFC. Looking ahead to next week, Trading Central analysts will be looking at the exotic pairs of the NZD, PZO, and CDD. They will be looking at the NZD because it has broken below its channel lower boundary and does remain under pressure. They will be looking at the PZO, which is the U.S. dollar against the Mexican peso, because that pair has posted a rebound but should strike against its new resistance. The RSI for the PZO is also capped by a medium-term declining trend line. And last but not least, they will be keeping a close eye on the CDD because it is mixed as the pair has rebounded on its support and is approaching its resistance. And that does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.